Good afternoon, everyone. In today's video, we're going to do a walkthrough of the S&P, the Dow, the Nasdaq, and the Russell futures, really contrasting them almost side by side, walking through each market to try and understand what volatility looked like today and how we were able to trade that volatility. Now, starting with the S&P futures first, if we draw our first hour line test, that's the line at 7 a.m. Pacific in the case of the S&P, the Nasdaq, and the Dow, 30 minutes after the market's open, so we have a full hour's worth of data. We then assess to see which volatility model should we be using. Now here I have our scalper volatility model plotted, and if you take a look, we breach the upper edge of the volatility box line, and then we just continue to break outside of our volatility box clouds. This right here is our sign that we should be switching over and expecting a little bit more volatility in the S&P futures. So that's our sign to switch from the scalper to our aggressive model. Now, before we continue, if I contrast this with, say, the Dow in that first hour test, we breached that cyan entry line right here, but we also then had the equal and opposite follow through. That's to say, if you took this distance right here outside of the cloud to the cyan line, and you measure it from the other side right here to see really do the sellers have some sort of control here, or is it all the buyers, then we did pass that first hour test, which kept us on the scalper in the Dow. Now, if I contrast this with the Nasdaq here, you should notice something similar as well. In the case of the Nasdaq, we breached our cyan line, went into the cloud, and then again had that same equal and opposite follow through. So both the Nasdaq, the Dow were suggesting to us that the scalper was still being respected. The S&P so far was the only market on the aggressive volatility box, which for all of our members that read that morning note, really gave some sort of indication that we should expect volatility as the day progresses, and for the Nasdaq and the Dow, along with the Russell as well, to catch up to the S&P's volatility. Now let's move on to the Russell here, which in that same first hour test, we didn't even breach the cyan line on the scalper in the Russell. So that's where in the morning, that's what our volatility ranks were. The S&P was more volatile than the Russell, the Nasdaq, and the Dow. Now let's come back to the S&P here. Now the S&P took us to the aggressive volatility box once we had that breach of that first hour test. And once I load in the aggressive volatility box here, you'll notice that we breached the edge of that cyan entry line. Then we had that follow through, so the models are now being respected. Keep going forward. No other trades in the S&P for the rest of the day. So that switch in the S&P was a little bit more conservative than I think necessary. However, it usually keeps us out of trouble, where now if you come into the Dow, we knew that the Dow is a place you could still focus on a more aggressive level. Then you take a look to see what happened in the Dow. The first place we had a breach was right here. And then after that point, we're waiting for the edge signal confirmation. That came right here. You had an opportunity to enter at the cyan line or better. And in the case of the Dow here, we didn't really see the kind of follow through we were expecting before price action continued to go outside of the clouds. And that was it for the rest of the day in the Dow. So once we broke outside of the clouds right here, that then took us from our scalper to our aggressive. And the only clue that I think you had here again was based off of the morning's S&P being more volatile than the Dow and the Russell, and the Nasdaq, excuse me. Now, however, if you contrast this with the Nasdaq, so let's come back in here. Let's go to the Nasdaq Futures. The Nasdaq via the scalper looked much different, right? And the Nasdaq was the one that was being respected with the scalper, I think, the best. So our first opportunity came when we had price action breach our cyan entry line right here. We then had the edge signal multiple times, once and twice, along with opportunity sent at the cyan line. And this trade was a go, which you'll notice gave us a really nice winner, not only to our T1, but our T2 as well. Now, to give you an idea of what that stop looked like, the stop on the Nasdaq via the scalper was about 52, 53 points. A little bit of room outside of the volatility box. We're looking for that same distance on the opposite side. We ended up going, I think, a grand total of 86 points, surpassing even that second target with the target line, which was right around the same T1 zone. Now, the second trade in the Nasdaq came when we had a breach of the other side's volatility box entry lines in the next hour. So once we had that, we had our edge signal right here. And even from this point, we still ended up going and hitting our T1 and T2 one more time. T2 is this gray target line. And then again, you're looking for a breach of the cyan line here, which we fell just a little short of, about 1 point, I believe, a little bit less than even 1 point. So for those of you looking to be a bit more aggressive, I've highlighted this concept of the zone to try and start to build up your position. But for those of us that use futures, this extra bit of risk starts to really add up when you're skewing the risk to reward. And so unfortunately, this did not hit the cyan line, so no trade here yet. So in the Nasdaq, we had the first long right here, along with a short right here. Now keep going forward for the rest of the day in the Nasdaq, we really didn't see any other opportunities. So in the Dow, we had that one trade, which was an opportunity to try and get short, ended up going outside of the volatility box clouds, didn't hit our targets there. In the case of the Nasdaq, we had two trades here, both of which went on to hit their actual targets. Now contrast this with the Russell, which you'll notice was much different. The Russell in that 8 to 9 a.m. Pacific hour, so that's this guy right here, we saw something interesting here. So very little volatility in the Russell leading up to it. If I zoom in closer, the way price action looked like in real time was we had a breach of our sign entry lines right here. We then got our edge signal. We ended up hitting that target before then going straight outside of our volatility box clouds, very similar to the Dow, where we ended up going outside of the scalper's cloud. So that then took us from the scalper to the aggressive volatility box model. So if I go ahead and load in the aggressive volatility box model on the Russell, you'll notice that this does a better job of containing price action, right? So we have a breach of our sign entry lines. We then see that follow through. This was towards the edge of the hour, so not as interesting in terms of an actual trade, but still gave us the confidence that the aggressive models were the ones that were being respected in the Russell. And then keep going forward in the Russell, and that was pretty much it. The aggressive then kept us out of trades for the rest of the day, along with some of the greater volatility than the scalper models could actually handle. All right, so hope this walkthrough gives you an idea of not only how that first hour test gives you an indication of when to expect more volatility. Places like today where we had clues with the S&P being on the aggressive volatility box versus our three other indice markets being on the scalper box, but also how to trade the rest of the day once you see the early morning signals. All right, hope this video helps. Take care, everyone. Good luck trading, and we'll see you in the next update.